All right, let's dive into something that powers, well, pretty much our entire economy, but can often feel super complicated: the financial market. Think of it as the engine that fuels new ideas and helps build wealth. And you know what? By the end of this, you're going to get exactly how it all works.
So, have you ever really stopped to think about this? A company has a game-changing idea, but they need a ton of cash to make it happen. At the same time, maybe you've got some savings that you'd like to, grow into something more. How do you connect those two dots?
Well, the answer is a giant, global marketplace. But instead of fruits and vegetables, this place trades in money itself. And this flowchart right here, that's going to be our map. We're going to use it to see how all the pieces fit together.
Yeah, when you boil it all down, that's really all a financial market is. It's just a big, organized system built to connect the people who have extra money, savers like you and me, with the people who need that money, like businesses and entrepreneurs.
Okay, so let's get a little more specific. The official definition talks about an infrastructure for trading financial securities. That sounds a little stuffy, right? But securities is just a formal name for things you've already heard of, like stocks and bonds. They're basically just tradable promises of future value.
Now, just like your local grocery store, this marketplace is split into different sections. And it's all based on one simple question. Do you need the money for a little while or for a long time?
And this breaks it down perfectly. On one side, you've got the money market. This is for all the short-term stuff, like a business needing a quick loan to pay its suppliers. On the other side, you've got the capital market. This is for the big, long-term projects. Think a company building a whole new factory or you saving up for retirement. And this is where we find stocks and bonds.
Okay, so for the rest of our tour today, we're going to be walking down the capital market aisle. It's honestly the part that gets the most buzz, because it's where the future gets funded.
So how does a company actually get its hands on that long-term money? Well, it all starts right here, in what we call the primary market. A good way to think about it is like a grand opening, or a company launching a brand new product for the very first time.
The key thing to remember here is that the primary market is where these stocks and bonds are brand new. They're being created and sold for the very first time. This is the one and only time that the company itself sells its shares directly to investors to raise cash.
And you can see that direct connection right here. The company creates a stock, an investor buys it, and bam, the company gets the capital it needs to grow. It's a simple, direct transaction.
Now, you have definitely heard of the biggest show in the primary market, the IPO, or initial public offering. This is that huge moment when a private company decides to go public and sell shares to absolutely everyone for the first time.
But that raises a really important question, right? Say an investor buys some shares in that big IPO. What happens if they want to sell them down the road? Or what if you miss the IPO, but you still want a piece of that company?
And that brings us to the next stop on our tour, the secondary market. This is the bustling, busy trading floor where all the action happens after that initial sale.
So here's the big difference. In the primary market, the company sells to an investor. But here in the secondary market, it's investors trading with other investors. The company isn't involved at all. If you buy a share of a big tech company today, you're not buying it from them. You're buying it from some other person who decided to sell.
Yep, this is the stock exchange, the one you see on the news with all the numbers scrolling by. Now, its most important job is to create something called liquidity. It sounds like a fancy finance term, but all it means is that it's easy to buy and sell your shares. And that is absolutely crucial. Without liquidity, investing would be like buying a car you could never ever sell. It gives people the confidence to invest in the first place because they know they can get their money out if they need to.
Okay, so we've got the primary market for new stuff and the secondary market for all the trading that happens later. It's a pretty neat system. But so what? Why does this whole setup matter so much? To answer that, we really got to zoom out.
For any of this to work, you need trust. You need rules. And that's why, over time, countries all over the world created regulators, like the SEC in the US or SEBI in India, to protect investors and make sure the game isn't rigged. They opened their doors to global money and shifted away from total government control to a system where the market, that's investors like you, gets to decide which ideas are worth funding.
I really like this quote from one of our sources because it puts it so well. The market basically acts like a giant voting machine. Every single time someone invests, they're casting a vote of confidence, helping to point society's savings toward the projects and businesses that people believe in the most.
And really, if you remember just one thing from all of this, let it be this.
The whole point of this entire system, from the IPO to the daily stock ticker, is to channel money from where it's just sitting around to where it can be put to use to build, to innovate, and to create.
So when you think about it, this whole thing is this incredible living network. It connects the dreams of entrepreneurs with the savings of millions of people. It's constantly searching for the next breakthrough idea to fuel. And that leaves us with just one question. What's it going to be?